Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, we're going to be joined by a special guest. He's the founder of MinerMetrics, Jaran Mellerud, to give us his analysis on the Bitcoin mining space, some of his top picks, and his thoughts on the Q3 results we're starting to see from this sector. Now before we get into all that, please take a second, hit the like button, you guys. It's a big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join. And let me know what you think of today's discussion, specifically our top picks in the Bitcoin mining space, and whether you agree or disagree with our sentiment on this sector moving into next year's halving event. Now with that being said, let's get into today's interview. Okay guys, so that's right. Today's video, we've got a special Bitcoin analyst and guest for you, Jaran Mellerud. He's the founder and CEO of MinerMetrics. They do in-depth analysis of Bitcoin mining stocks, which obviously we talk about a lot on the channel. So I wanted to invite Jaran on and ask some questions now that we're starting to see Q3 earnings come out from a lot of the top miners. So Jaran, thanks so much for being with us here today.
Yeah, thanks so much for having me today.
Of course, you're welcome back anytime, my friend. Now, to start off, for people who are unfamiliar with yourself and MinerMetrics.io, what it's all about, can you give us a quick little background and kind of a high-level summary?
Sure. So I've always been very interested in investing. I've always been interested in investing and making money. And that was also what led me into Bitcoin and ultimately Bitcoin mining. I've been a Bitcoin mining analyst now for 2 years, and I decided to start MinerMetrics. It is a research platform for Bitcoin mining investors. So I manage my own Bitcoin mining portfolio, which is part of my more diversified investment portfolio. It consists of mining stocks, hosted mining machines, and I'm also looking into other emerging mining-related financial products. So to achieve outsized gains in my own portfolio, I need to do deep financial research, and I want to share this research with my followers through MinerMetrics. We also help investors mine Bitcoin through our global hosting services.
Okay, great. Yeah, I was going to ask what was kind of the genesis or the reason behind it. So it was really your own research, your own due diligence and investing that kind of led you to creating MinerMetrics, eh?
Yeah, that's correct. I want to share my own research with other analysts so that we can improve it and get better together and make some good stock picks along the way.
Well, on behalf of anyone who's read your work, thank you, because it is in depth, and I know I got a lot of takeaways, especially from some of the Bitfarms analysis. I know that's one of your top picks as well, which we're going to get into. So we've seen a lot of the Q3 results come out pretty much from all the top miners now. What are some of the trends you're noticing with the numbers, some of the strategy changes we're seeing here?
The biggest trend, I would say, okay, to start off, the Q3 and Q2 reports are very, very similar. Not much has changed over the quarter. So on a revenue and result perspective, they're very similar. The big difference is the power curtailment credits. So some companies like, for example, Riot and Argo Blockchain, Cypher, they earned much more power credits this quarter than the previous one. And for example, Riot had effectively a negative cost of mining Bitcoin this quarter. But aside from that, it's very similar. One trend we see is companies paying down debt. For example, Bitfarms, they have been diligently paying down debt over the quarter. Companies trying to get ready for the halving, paying down debt, improving their liquidity. Also, they started to raise capital again, raise equity again, which is a bit easier now than it was a few months ago.
Most definitely, yeah. There's a little bit more optimism in the Bitcoin space for sure, and in the Bitcoin miners. We had Jason Less on the channel from Riot. We talked extensively about that power strategy, which was a huge home run for them this year. And then Jeff Morphy was on from Bitfarms talking about that debt strategy. So that was going to be my next question, Jaran. We've seen companies like Bitfarms starting to pay down debt to really strengthen their balance sheet going into the halving. The other trend I've noticed is people are really starting to upgrade their fleets to become more efficient. So aside from those two, is there anything else you think companies need to be doing to survive halving?
There are two important factors that I look at going into the halving. One is the direct Bitcoin production cost. The other is the liquidity. So if companies have good liquidity and a low direct Bitcoin production cost, they will do tremendously well following the halving. If companies have good liquidity but a high direct Bitcoin production cost, they can also survive the halving because they can use this liquidity to purchase distressed assets following the halving. But if companies have both poor liquidity and high direct cost, that doesn't look that good. But we can already see a few companies that are the companies that will struggle after the halving are the companies that are already struggling, who are already having very poor liquidity and a high production cost. There are some companies like Bitfarms that doesn't have a very low Bitcoin production cost right now, but they have an inefficient fleet, which is the reason for their high Bitcoin production cost, which means that they can swap this fleet with a more efficient one following the halving, likely at very low ASIC prices, and thus become among the most efficient miners in the industry with the lowest production cost. I'm quite worried about the miners who have a mediocre Bitcoin production cost, but at the same time the most efficient fleet, because they don't have the opportunity to renew their fleet and lower their cost to among the lowest in the industry. So these two factors I'm looking at right now, and I'm favoring the companies that have quite, actually not the most efficient fleets, but at the same time not the lowest Bitcoin production cost, because this indicates that they have the best sites with the lowest operating costs, which they can transform into a very low Bitcoin production cost following the halving. And they will do really, really well, because if the Bitcoin price doesn't increase tremendously following the halving, ASIC prices will become extremely cheap, and they can very cheaply secure S21s, for example, or the newest MicroBT series to very low prices.
It's super interesting you brought that up, and it's a great point that if companies are already running efficient miners, but they're kind of mid-pack in terms of their costs, they don't really have a lot else they can improve. But for companies such as Bitfarms, which is my top pick right now, I saw they just secured 2.1 cent per kilowatt hour power in South America there for I think a 6-month term. So stuff like that is phenomenal, Jaran, because you're right. If they've already locked in the low power costs and then they layer in newer rigs, they've really got a recipe there. And the other thing I noticed, I think you said this on Twitter or X, a lot of the companies and a lot of the CEOs I've been talking with, they're saying, yeah, global hash rate is going to drop 20, 30, 35% after halving as people who are inefficient unplug their rigs. But as you alluded to, nobody is saying that they're the ones going to be unplugging. So I thought that was interesting as well. There for sure is going to be some consolidation. There's for sure going to be companies that go out of business. And for situations like Bitfarms, they're going to be able to take advantage of that and buy equipment, hopefully at low costs. So I thought that was a really interesting analysis there. And feel free to throw in some names, Jaran. I know you had said there's a couple stocks that kind of stand out for you. Specifically, you had said you wanted to talk about Bitfarms a little bit, and I think Marathon as well. So feel free to share some thoughts there.
Sure. So Bitfarms and Marathon are kind of, it's very different companies. Marathon strategy is basically accessing cheap capital and deploying that on a very large scale. They have not been historically the best capital deployers. While Bitfarms doesn't have the same access to capital, but they're extremely good operators. So Bitfarms has kind of been forced to be a really good operator. I would say they are probably the best operator out there of all the public miners. Not only do they have very low Bitcoin production cost compared to the efficiency of their fleet, but they also have very high uptime compared to most competitors. So they're able to have a low Bitcoin production or low power price, but at the same time operate with high uptime. Companies with like Riot or Cypher, especially Riot, they have very low power prices, lower than Bitfarms, but they traded that for very low uptime. So, and I kind of like companies that have both of these, both low power prices and high uptime, because a lot of Bitcoin mining investors, they underestimate how important the uptime is. For example, I've done a lot of analysis on the trade-off between uptime and high power prices. And if you have, let's say, lower than 80% uptime, you need an extremely low power price for it to make sense, like less than 4 cents per kilowatt hour. And there are not that many public miners who have that power price. Also, for example, I like companies that are as vertically integrated as possible, which Bitfarms are. Marathon is an example of a not vertically integrated company. They have these hosting sites where they pay relatively high hosting fees. I estimate that in Q3, Marathon paid $66 per megawatt hour of power consumed, which is pretty high. Bitfarms was around $40 per megawatt hour, so much lower. Yeah, this is a very big difference. But you see now that Marathon is moving away from this hosted model. They're moving towards a joint venture model, which is, I believe, much more efficient at getting a low cost. And this joint venture model will allow Marathon to expand into international markets with extremely low power costs. So I'm much more bullish now on Marathon than I have been historically, and I think they will become a much lower cost operator. They will also have no problem surviving the halving due to their massive liquidity. So I think Marathon will actually come out of the halving as a better company than they are now. So I'm not bearish on Marathon. I think there are a handful of smaller public miners that will really struggle following the halving. But these companies are already struggling. But at the same time, these companies have very low valuations. So if you purchase them, if you believe that the Bitcoin price will just rip through the roof right now, then you can get extremely high gains by purchasing these distressed miners right now. So if I was extremely bullish on Bitcoin now, I would probably purchase some of these stocks. That includes Greenwich, Stronghold, and Mawson. But I'm not that bullish right now. I think most of the short-term upside has been already harvested for Bitcoin. But I'm, of course, long-term bullish.
Great. Yeah, we all are. We all are. That's what joins us all together. I'm hoping we do see a pretty good pump into Christmas here. I think the spot ETF, we will get some promising news prior to Christmas, and hopefully that leads to kind of that Santa Claus rally. So just to circle back, so Bitfarms is one you like, Marathon's a big one you like. Are there any others kind of the bigger boys that you're keeping an eye on right now?
Yeah, I can tell you just my portfolio right now. So I hold Cypher and the Bitfarms and the Bitdeer. And the reason is because, sorry, not Cypher, I mean CleanSpark. So the reason I hold these stocks is because I like to invest in high quality Bitcoin mining companies that I can pick up at low valuations. All these companies have currently low valuations at the same time as they are some of the best operators out there. So I'm keeping an eye on them. Every month I do an analysis on the valuations of these stocks where I compare them using several valuation metrics. And if I see that some of these companies suddenly get very overvalued, then I might sell them and pick up another high quality operator, which is lower valued. But right now I hold Bitdeer, CleanSpark, and Bitfarms. But there are a handful of more quality companies out there that I might purchase later.
CleanSpark is a top pick for me. I've been adding to as well. So speaking of valuations, that's kind of the next segment I wanted to talk about. This is a question that a lot of people in the YouTube community have been asking and trying to answer. If you look at the share price and correspondingly the valuation of a lot of these publicly traded miners, it used to be very closely correlated, almost exponentially with Bitcoin. If Bitcoin was up 1%, the miners were up 3%. We've now seen that start to diverge. It seems sometimes Bitcoin is up, but the miners are down. Yesterday was the inverse of that. Bitcoin didn't do a lot during the trading day. The miners had a huge rally. Why are we seeing that disconnect between Bitcoin mining stocks and the price of Bitcoin itself?
Yeah, it's undoubtedly that mining stocks are getting less correlated with the Bitcoin price. For example, since in the last bull market, I did some analysis. A bucket of the 4 biggest public miners were 0.95 correlated with the Bitcoin price from the bear market to the bull market. This is certainly not the case anymore. And I can't really tell why that is the case, but my hypothesis is that the investors are getting more sophisticated because people start to understand that mining stocks, like on a fundamental level, shouldn't just blindly follow the Bitcoin price. And that would also be kind of inefficient because if you just want a leverage bet on Bitcoin, you can just buy the Bitcoin call options, for example. You don't need to buy Bitcoin stocks, which has a lot of extra business risk. So I think investors are getting more sophisticated and understanding that these companies are not fundamentally correlated to the Bitcoin price. They're correlated more with hash price. So mining stocks revenues consist of the hash price. And the hash price is priced by the Bitcoin price, but also the transaction fees and the block subsidy and the block reward. So there are actually 4 factors that should affect the revenues of these companies, in addition to the electricity prices they pay, which should affect their cost structure. So in theory, these stocks shouldn't be fully correlated with Bitcoin. And I think the correlation with Bitcoin will only gradually decline over time. But in the next 2 or 3 years, I still think they will be highly correlated with Bitcoin, albeit less than historically.
Gotcha. Yeah, it makes sense. And there's a lot more information. We're also seeing a lot of strategy change or divergence between the group as well. And that was going to be my last question for you, Jaran. I know I had Daniel Roberts on from Iris Energy, and we talked about their hodl strategy, and he made it very clear we are not interested in hodling our Bitcoin. We want to sell it just like a oil and gas or a gold producer. I believe you kind of agreed with that notion based on your last comment there. If you want leverage on Bitcoin, just buy Bitcoin. However, we are seeing companies, Hut 8 Mining on the one extreme, pretty much their whole company is built around their hodl. CleanSpark, which is one of your top picks, has been aggressively hodling over the last couple months. What strategy is best here, or are you kind of trying to play both sides?
I certainly don't like the company strategy that owns just hodl everything, refuses to sell nothing, and they write in all their press releases how much Bitcoin they hodl. It's kind of a marketing scheme in my opinion. So during the previous bull market, a lot of investors, they wanted a Bitcoin correlated investment like mining stocks, high beta Bitcoin. And of course, the companies that hodled a lot of Bitcoin, they did really well in the bull market. But I just don't understand why some investors believe that it's somehow better to own Bitcoin through a public company than just not buy it themselves. Why should a Bitcoin get a higher value if it's owned by a Bitcoin mining company? It doesn't make sense. In addition, some of these companies have like hundreds of millions of dollars in Bitcoin on their balance sheet, and then the next day they will go and raise $100 million of equity from their shareholders. It doesn't make sense. If you have too much liquidity on your balance sheet, you should use that instead of raising the capital from investors. So I believe that over time, especially now with the Bitcoin ETF coming up, The Hodl narrative will gradually disappear. We see also like miners is selling much more Bitcoin now than historically, and yeah, it's really only Marathon and Hut 8 to still have like huge Bitcoin hodls. Most of the others have sold their hodls a long time ago. But still, miners need to keep a good liquidity position due to the volatility of the industry. And it's probably better to keep at least a little bit of this liquidity in Bitcoin, since Bitcoin is a better treasury asset than pure cash. But I still don't agree to just hodl everything instead of raising and then raising a lot of equity from shareholders instead of just selling some of the hodl.
Makes sense. Yeah, and obviously we've got MicroStrategy in the mix, huge position on their balance sheet. I think we will start to see more companies start to incorporate Bitcoin as part of a balance sheet strategy, which obviously I'm excited for. But Jaran, this has been an awesome discussion. I really appreciate your insight. You're very knowledgeable in the space. Sounds like we agree on most of the top picks here as well. And again, you guys, this is not financial advice. This is just our opinion. So always go in, take a look, do your own due diligence. We'll leave all your contact info, Jaran, in the video description, the MinerMetrics website, your Twitter handle as well. And we really appreciate your time today, buddy.
Thank you so much for having me.
You're welcome, and we'll see you soon. Guys, if you're still watching, feel free to subscribe, hit the like button. It's a big help. We'll see you in the next video, and have a great day.